Just before the holiday, you probably heard about it. It's the new Tax Reform Act that was signed into law. Question is, do you know what this means for your bottom line? Local CPA Phil Umansky, great friend of the show, is here to break it all down for us. Wonderful to see you, and Happy New Year,
Happy
Phil.
New Year to you as well, Greg.
New changes for the tax law here that was signed by the lawmakers. We've heard a lot of the good, a lot of the bad, some ugly here from both sides of the aisle. What does this Tax Reform Law Act mean to all of us?
Well, the interesting thing is it's titled the Tax Cuts and Job Act of 2017. So we got to assume that there are some tax cuts. And in fact, there are tax cuts. There are tax cuts for corporations, and there are tax cuts for individuals, and there's also tax cuts for estates. So we're going to talk a little bit about the background of the law and try to bring some practical insight to some of your viewers.
Phil, how is this going to affect the bottom line of a lot of just everyday Americans?
All right, let's take an example. Let's say that you are a worker on this great show. Beginning in February, you're going to have more money in your paycheck.
Really? Beginning this February, next month?
Next month. Now, there's a couple things you can do with that money.
Okay.
You can buy stuff. Buying stuff means businesses get profits. If business gets profits, they can provide dividends to shareholders. Also, if businesses get profits, their stock price can rise, and your 401k will go what? Up.
Yes,
and that
which is a
means-
good thing.
Which is a good thing. So the whole intent of it really is to stimulate the economy, to create jobs, better jobs, higher paying jobs, and really have more money, sort of what we call in the private sector, for people to do things with. And you can also save it. It's your choice.
Are we talking hundreds, thousands of dollars for the average person?
I wouldn't say, I would say more hundreds than thousands of dollars. It really is a tax cut really across the board. The wealthy are going to benefit, but so will be the middle class. Now, there are some nuances in the law where some people may be paying actually more taxes because of the way it's written.
Tell us about the corporate tax rate, what that means. It's going down as well.
Okay, so the corporate tax rate is going, we have a chart here, it's going to be going down. It's the high rate now, the top marginal rate is 35%, so it's going to go down to 21%. So that's going to put more money in the coffers of corporations. Now, some have actually already been giving bonuses to their employees. I hope you get a bonus, and I hope Bill and everybody else gets a bonus.
We've got the extension to the general manager, yes.
Yes, and we've heard of those corporations that are giving bonuses to the individuals. But that will allow corporations to expand their markets, build new operations, hire more people, sell new and better products, and that will help really the consumer and everyone else.
Phil, what happens if the everyday American doesn't spend that extra money to stimulate the economy?
Okay, so if they don't spend the extra money, then they can save it. Well, saving provides capital to corporations because stockholders provide capital to corporations. Plus, saving will help send your kid to college. Saving will help you go on a new vacation.
But the folks that say that it will stimulate the economy might be eating their words.
Well, that's absolutely right. In fact, I've got something here. When they score this in the Capitol, the legislature, they're saying it's probably going to add about $1.5 trillion to the deficit. Trillion dollars. That's absolutely right. Now, the Republicans that basically passed this said that there's a dynamic model in the sense that if the economy grows, that's actually bringing more tax revenue into the government. So it's sort of an experiment that we're going to look at.
Phil, have we seen this in the past with such a large tax cut? And if so, what has happened in the months and maybe years afterwards?
Well, we had it back in the 1980s when President Reagan was there. And there was a concept called supply-side economics, that tax cuts would actually bring more revenue into the government. And there's been serious study on that at a different time now. But that's certainly what the intent of the law is.
Sort of the trickle-down theory?
Yeah, absolutely.
And did that work for a short time?
Well, you know, back in the Clinton administration, when the economy was really booming and the stock market was high, we were actually running at a surplus in terms of revenues.
Tell us, starting in February, is that going to be the number of dollars that's going to be in your paycheck that'll be extra? Or will that fluctuate over time?
No, it should not fluctuate over time unless, of course, your salary goes up. Now, the big feature of this is the personal income tax rates, and I hope the camera can zoom in on this, because what's happening here is all of the tax rates are going down. Even the highest tax rate is going from 39.6% to 37%. So you might say, well, that's great. I'm getting a tax cut because all the rates are going down. But the big thing is the standard deduction. Now, the standard deduction has almost doubled, but the itemized deductions are being curtailed a little bit You still have the mortgage interest deduction, you still have the charitable contribution deduction, but the state and local tax deduction is limited to $10,000. And that was one of the big complaints by the northeastern states like New York and Maine and Connecticut, is that those taxpayers in those big states, because they're paying a lot of those local taxes, won't get to deduct as much because of the $10,000 limit.
Should a everyday American going forward, should they change their taxes?
Well, what I would recommend, and I say this to the audience, is we're only touching the surface. This is just the iceberg. It's very complicated. Anytime they try to simplify things, it gets more complicated. So these are just sort of general principles, but I would ask every individual, because it goes into effect this year, doesn't relate to taxes for last year and what you're going to be filing on April 15th, but it does relate for taxes that will be paid in 2019, is please go to your tax professional, whether it's a CPA or professional tax preparation service, and ask them, in light of your particular circumstances, how it's going to affect you and what you can do to structure your transactions and financial affairs so as to legally reduce the taxes as much as you possibly can.
Well, starting to see more money in your paycheck, that's got to be a good thing starting next month, but we'll see what the ramifications are down the road. Phil Umansky, it's always a pleasure, my friend.
Thank you very much.
Wonderful to see you. All right, we're going to post more information on the show website by early this afternoon at WTVR.com/VTM. Phil, thanks so much.
Thank you.